Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Friday, January 9th, London Open. The first U.S. jobs report of 2026 tops the agenda as the dollar holds firm, while oil softens on oversupply signals and the yen stays under pressure despite better Japanese data. China's inflation edged higher, easing deflation worries, but producer prices remain negative, keeping policy support in focus. Let's start with the global picture. Markets are braced for U.S. non-farm payrolls at 13:30 GMT, the first clean read after last year's shutdown distortions. Consensus points to a modest payroll gain near 60,000, unemployment nudging to about 4.5%, and wages up roughly 0.3 month on month. With the next Federal Reserve meeting on January 28th, traders largely see no change near term, and the path for cuts leaning toward mid-year, unless labor data materially surprise. There's also a potential U.S. Supreme Court ruling on tariffs due today, which could add an extra policy wrinkle. In Asia, China's consumer inflation rose 0.8% year-on-year in December, just enough to avoid a deflationary 2025 print overall. But producer prices are still falling. That mix keeps the door open to further easing. The Australian dollar is softer for a third session after the China data, and regional equities were mixed, though defense names outperformed, with one Korean aerospace stock jumping sharply. Meanwhile, tensions around rare earth export curbs to Japan and Tokyo's pushback with G7 partners have added a geopolitical tint to trading. Turning to currencies, the US dollar extends its weekly gains into the London Open. The yen remains on the back foot, with doubts about a quick turn from the Bank of Japan and the China-Japan rift outweighing a rebound in Japanese household spending. Sterling is steady against the dollar, but firmer versus the yen. The euro hovers near recent lows after a 5-day slide, and the Indian rupee eased at the open as the stronger dollar sets the tone into payrolls. The Swiss franc is catching a bid on safe haven interest, slowing the dollar's advance there. Commodities reflect a more cautious growth tone. West Texas crude is giving back some of yesterday's bounce as rising inventories feed oversupply concerns, a backdrop that has helped keep the Canadian dollar on the defensive against the greenback. Gold is edging lower as the dollar's strength persists, with softer spot prices also reported in India. What does that mean for markets and sectors today? A firm dollar into the jobs release is broadly risk-neutral to slightly risk-off, supportive for the dollar versus Europe and Asia, and a headwind for precious metals. Weak oil complicates the picture for energy shares and typically weighs a bit on oil-linked currencies. Looking ahead, it's all about the U.S. labor report and any tariff ruling headlines. In Europe, trade watchers will track developments around the Mercosur deal process, while the broader debate on information integrity continues to bubble in the background. What I'll be watching today, the Aussie dollar against the US dollar, leaning lower if China demand doubts persist and the dollar stays bid. Dollar yen, where the uptrend holds as long as policy uncertainty in Japan and regional tensions weigh on the yen. Dollar Canada, biased higher if oil remains soft. And gold, vulnerable if the jobs data underpin the dollar, but quick to rebound on any downside surprise. In short, markets are focused, not fearful, heading into payrolls. The tone is firm dollar, soft oil, and a watchful eye on policy signals. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.